Julian, thank you so much for joining us, and please do take it away.
Well, morning, everyone. Thanks very much for joining the session this morning, and it's great to have the opportunity to speak to you. I'm Automotive Transformation Director at the Advanced Propulsion Centre, and we're an organisation that works with the Automotive Council and with BAYS, and effectively tries to support, as we have done since 2013, the development of low-carbon propulsion technologies in the industry from an R&D perspective. And a year ago, we were also selected as the delivery partner for the Automotive Transformation Fund that was announced by the government almost a year ago. Just want to touch on a few things. Quite a bit has happened over recent months. We've seen a bit of a rattle through of fairly big drivers for the industry. We've seen the EU trade agreement, the much vaunted trade and cooperation agreement as it's known. We've seen some big policy announcements towards the end of last year around 2030, 2035, petrol, diesel and PHEV vehicles. And we've seen more recently some additional funding for DFT, through DFT for charging infrastructure, and confirmed funding for the ATF. And very recently, changes to the plug-in car grant scheme. And we must not forget, 2020 was really an annus horribilis for the industry when we look at the impacts of COVID. And some of those impacts, despite real good recovery in many areas, are actually starting to haunt us now. So what impact will they have perhaps over the longer term? So very briefly, around the trade and cooperation agreement, it was a bit of a late deal, a wonderful Christmas present on December the 24th on Christmas Eve. And that had the effect really of creating some investor hold-off. It's inevitable that there are some supply chain casualties, but perhaps so far been remarkably few. But I think we have seen some instances of supply chain partners perhaps looking to protect their business and consolidate, and sometimes that consolidation has not happened in the UK. But by and large, the outcome of the TCA was quite positive in our view. One of the impacts is that it will drive regional capacity in battery manufacturing and other EV commodities by virtue of some of the rules of origin that are contained in it. And the pain was initially eased through some transition periods that run through till the end of 2023, and then again a second period until the end of 2026. But the targets, frankly, are modestly aggressive. And so there is a lot of work to do to support industrialization of many of these technologies, which have to date got a predominant supply base from Asia. And the key feature is that, more or less what happened before with accumulation of content to support these rules between the UK and the European Union is a feature that continues by virtue of this deal. So conclusion, drives the need for capital in the short term, but will probably benefit the industry in the long term by helping accelerate the development of these technologies in the UK and beyond into Europe. The other big forcing function is around 2030 and the registration ban for petrol and diesel vehicles. And this was frankly necessary to decarbonise the transport sector. It accounts for about 28% of greenhouse gas emissions in the UK, and is really the only sector that has not been making massive gains, largely because of a shift in purchasing habits. And frankly, we're bouncing around the technical limits of what can be achieved with petrol and diesel vehicles. We've got a target to get to of 55 grams a kilometre, and pretty much the only non-plug-in car that you can buy today, the best that you can get is around 85 or 86 grams. So we're really going to struggle with just the existing technologies. We have to electrify, and clarifying the landscape is really going to help accelerate. So it's an opportunity for car companies to rationalize product lines and be quite bold with some new platforms to avoid having to have the content of petrol vehicles, diesel vehicles, plug-in hybrids and battery electric vehicles. Just clear the decks, think about a new strategy, but that has obviously got some pain in terms of potentially throwing away some investment to date. And the UK industry is perhaps a little bit more exposed because we are a mass exporter of internal combustion engines, about 1.2 million engines a year are exported. It would be great if the whole world had aligned targets, but unfortunately we don't. So I think the outcome of this is that it's probably delayed some market entries, which will impact on accessibility in particular for some segments of vehicles. Then just briefly looking at funding and COVID and the long term, we need to recognise that these transformation investments are massive. If you're looking at satisfying, perhaps 20 or 30 gigawatt hour of battery manufacturing alone, you're looking at investments that are around 2 to 3 billion pounds for a single factory. And we're going to need probably 4 of these by the time we get to 2030. So this is not insignificant investment, and we've got similar scale investments upstream in the supply chain as well. So we need lots of that. And the key, I think, for us is, that this has come at a time when the industry has been quite hard hit with the cash flow impacts of COVID and dropped sales. We've seen the industry reset from well over 1 million units to just under 1 million units in 2020, and it's going to take some time to recover. So these companies are wounded, it's affecting their investment plans, and now there is this huge burden of trying to accelerate the investment in these new architectures and upstream in the supply chain, when there isn't an awful lot of cash around. So I think we've got to focus on the carrots and not the big sticks, and really look carefully at how we can support the acceleration of this transition and industrial investment. So that's a quick perspective of the things that we see as the big drivers and have come out of the policy announcements over the recent months.
Brilliant. Thank you for that, Julian. Please do put your questions into the Q&A if you've got any questions for Julian. I will kick off, taking chair's prerogative there. And my first question for you is, what impact do you foresee the plug-in grant cut having on EV uptake? Obviously, that was a big piece of news last month. What do you think the impact's going to be of that?
I think in some respects, it's going to have a short-term impact for sure, but in the longer term, I think relatively modest impact. And we perhaps shouldn't have been surprised that there was a change coming when you look at the impacts of similar policies and incentives in other parts of the world. And where we really need to address is accessibility, particularly at the lower cost end of the market. And there were arguments that perhaps the incentives were perhaps over generous for people that could afford these vehicles in any event, and we're really trying to target things. If I look at some data from Norway, for example, the uptake of electrified vehicles as a result of their incentive scheme was 15 times higher per capita in the upper quartile of income bands compared to the first quartile of income bands. And that's a bit of a perversity that I think the government was keen to avoid replicating in the UK. We've got to focus perhaps not so much on initial incentives, but on making sure that we can drive down the fundamental cost of manufacturing vehicles at a lower entry price, and that will assist the uptake. That I think is probably the bigger challenge. So it's disruptive. It was at very short notice, but I think over the longer term, it will probably not have that much of an impact.
That's interesting. We'll ask that question to some of our other speakers as well and see what their views are too. Talking about issues with the supply side, for example, the shortages of semiconductors, that's been coming up in the news lately. Do you share concerns for supply now that we're post-EU exit? How long do you see this being an issue? And do you envisage any factors that will pose similar problems? I'd also be interested in hearing the audience views on this too. We'll pop a poll question up now, so please do let us know what you think by responding to that poll.
I think with semiconductors that are impacting the car industry, we've seen almost a combination of perfect storm factors. So we've seen increasing demand for these ubiquitous, supposedly, devices that are using consumer electronics. We're all sat at home by and large using lots of consumer electronics devices which use the same chips or the same manufacturing capacity. So that demand has gone up, and it's typically higher margin business. Car industry operates on quite short lead times, and uses that same capacity, and the manufacturing capacity was clearly interrupted last year through COVID. So we've seen reduction in output, increase in demand from one sector, and the car industry is the one that's been squeezed. Over time, electrified vehicles are still going to need lots of these devices, but I'm more concerned about some of the other materials that perhaps will be required for electrified vehicles. And I think actually the trade and cooperation agreement and leaving Brexit is actually the least of our worries when it comes to security of supply of many of these materials. I'm concerned about longer term capacity for things like nickel and nickel refining capacity, cobalt perhaps, lithium as well. When we look at the balance of supply at the moment, it's actually about even, and we're seeing almost record lows for nickel pricing, for example, which is a fundamental component that goes into electric vehicle batteries. We look out to 2024, actually it's going to be difficult to bring on refining capacity fast enough to suit the demand driven by electric vehicle batteries, as we see this exponential rise in demand for battery capacity, but we're seeing quite long lead investments required to bring it on for those upstream materials. So that's where I think we have to have a focus. And that is also where we're focusing some of our attention through support mechanisms such as the Automotive Transformation Fund, looking at that upstream materials supply chain. That's what we've got to watch for. When we build an industry, we've got to consider the entire end-to-end supply chain.
Yes, on a similar sort of note, I was reading only yesterday about recycling of batteries, and that being a potential opportunity for the UK for manufacturers. That's very interesting, Julian. We've got a question through from Tim Bailey. Hi, Tim. He's asked, given the low margins on street parking, where do you think the investment will come from for an area that is seen as critical to EV take-up progression?
I think this is where Department for Transport has got to step in and support on-street charging. It's all very nice, I run a nice electric vehicle with a nice long range, and I've got a home charger, so that's fine. I've got off-street parking. But if you live in an urban area, or you live without any on-street parking, you're really going to struggle. So this is where the incentives and the mechanisms through local authorities, through other charging infrastructure, will have to help to improve the usability of electric vehicles. And we'll see a lot of that supported at sort of end of street or local petrol station or coffee shop, but there is going to need to be some investment to cover the upfront capital cost of these charging stations in largely residential areas where housing density is quite high. And also consider apartment buildings, flats, high-rise buildings where you may have off-street parking, but it is not necessarily allocated to an individual. So there needs to be some flexibility in the support mechanisms for those charging situations as well. And and the slug of money that was allocated through OZEV for charging infrastructure support is quite significant, and it will have some real traction over the coming years, I'm sure.
Thanks, Julian. Just one last question I've got here for you. What do you think technology will look like that will meet the government's new view of the 2030 to 2035 hybrid definition, which says new cars and vans can be sold if they have the capability to drive a significant distance with zero emissions? What do you think that technology is going to look like if it's going to meet that definition?
I think it's really going to be an evolution with an extended range of today's PHEV technologies. But frankly, as we get closer to 2030, our own projections are that the volume of PHEVs actually sold in the UK will reduce very significantly as a proportion. So we're expecting quite significant PHEV penetration as a percentage of the market over the next few years, but really diminishing by the time we get to 2030, in part because vehicle manufacturers will not have necessarily aligned technology cycles that all finish at the end of 2030, and it's very expensive to accommodate different propulsion technologies in the same architecture. You just can't afford to keep it all going. So what will it look like? I think pretty much enhancements to today, possibly with slightly larger batteries, certainly with faster charging capability and better regeneration capability, more efficient regeneration capability. But fundamentally, we don't think it's going to be very significant by the time we get to 2030, except for specialist applications, specialist usage cycles.
Thank you, Julian. And I'm going to be very cheeky. One very last question, if you just conscious of time. So you can just give me a really quick answer to Paul Kirby's question. I would expect nothing less of you, Paul, than to ask this question of, do you think each transport segment should have a dedicated focus on funding and support? Cars at the moment seem to be taking the lion's share of investment, but vans and trucks need the support too. What do you think of that, Julian?
I think that's a very difficult concept in terms, to hypothecate money for specific segments is very difficult when you've got technologies that transcend different vehicle segments. Our fund and our activities support all vehicle sectors. So we do everything from cars, vans, heavy goods vehicles, passenger service vehicles, off highway, mining trucks, heavy haul trucks, the whole lot. And we're using the same sorts of technologies, and those often pass through. So I think to hypothecate for particular segments is probably inappropriate. We can get the best bang for our buck by focusing on the technologies that can transcend these vehicle segments. And often something that starts in one segment can really rattle down and start to help another. If you want to get costs down, you need to start with volume. And then that volume cost reduction plays back into some of these other segments as well. That's the key.
Thank you, Julian. That's all we've got time for, but thank you so much for sharing your insights today. I don't know if you can hang around and join in some of the chat as well. If anybody's got any other questions for Julian, you can always pop that in the chat and pick that up a little bit later during the webinar. Thank you, Julian.